How do companies truly navigate the incredibly complex, fast-moving waters of global markets, especially, in a tech landscape that changes so quickly?
Yeah, it's a great question. It's something that always sparks a lot of curiosity.
And it's exactly what we're diving into today.
That's right. Our mission is to take a deep dive into Aimtron Electronics Limited. They're an Indian company specializing in electronic system design and manufacturing, ESDM.
Great.
We'll be unpacking their recent H2 and FY25 earnings call, connecting it with, well, broader market insights.
And giving you a really comprehensive understanding of their recent performance, their strategic shifts, and what truly lies ahead for this growing player.
Exactly. And for this, we're drawing our insights from their official post-earnings conference call transcript. That's from April 24, 2025.
Okay.
Alongside market analysis data from Screener and Sovereign Discovery, updated as recently as July 2025.
Got it. So fresh data. Let's jump right in then.
Absolutely. So when we look at Aimtron's FY25 results, the numbers are, well, they're certainly compelling. They reported a total revenue of about 158 crore.
158 crore.
Yeah, with a profit after tax, or PT, of 25.73 crore. That translates to a pretty healthy 16% PT margin.
That's quite good.
It is. And stepping back for a moment, the year-on-year growth is quite remarkable. We're talking a 71% increase in revenue.
71%. Wow.
And their PT nearly doubled compared to FY24. Management seemed clearly satisfied, stating they met expectations.
Double pat. Okay, sounds like a very significant year for them. So Aimtron, they were incorporated back in 2011, right?
That's correct.
And they've clearly been on a steady climb. From, a single S&T line to their own facility by 2014?
Yeah, and now reaching that euro 58 crore revenue mark in FY25, it's quite a journey.
So what truly defines Aimtron as an ESDM provider? What does that one-stop solution promise actually entail for customer?
Well, it means they offer really end-to-end capabilities. So from the initial concept and design.
The very beginning.
Exactly. That includes all the hardware, firmware, mechanical design, test development. They carry it all the way through to full production.
So the whole package.
The whole thing. This includes complete box builds, plastic components, sheet metal, even wire harnesses.
Okay.
And this comprehensive approach, it's underpinned by their, high-value capabilities and their impressive global reach.
What sort of capabilities are we talking about? Certifications?
Yeah, definitely. They hold a strong array of certifications, things like ISO 13485 for medtech.
Medical, important.
Very. And IATF 16949 for automotive, CDSCO for Make in India medical projects. And they're actively aiming for AS9100 certification, that's for aerospace, by Q1 FY26.
Aerospace too, so diversifying.
Right. And their tech is advanced. They have a new advanced SMT line operational since November last year.
Okay.
It supports cutting-edge stuff like AI and IoT chipsets, and even incredibly tiny components like 0201s.
For those listening, what does 0201 signify?
It basically signifies their capability to handle the most advanced, really miniaturized electronics in the market today. It's quite complex.
Got it. High precision work.
Exactly. And their track record speaks volumes. 250 embedded design projects for over 500 global customers.
That's quite a portfolio. Now, looking at their business, you mentioned printed circuit board assembly, PCBA. That's still a big chunk, right? About 70% of revenue.
It is. Currently makes up about 70%.
But it seems they're actively pivoting beyond just that. Can you tell us more about this strategic shift? What's driving it?
Yeah, absolutely. This aggressive push towards increasing their box build contribution is a really critical strategic move for them.
Box build meaning the whole assembled product.
Exactly. The complete unit in its enclosure. They're aiming for that to be over 30, maybe even 40% domination in the new financial year.
Why the shift? Higher margins.
That's a big part of it, yes. But it's not just a revenue play. It fundamentally shifts Aimtron's position in the supply chain. Well, by offering these full end-to-end solutions, they move beyond just being a component assembler. They become an indispensable, high-value partner.
Makes them stickier for clients.
Precisely. It elevates their competitive moat in the whole ESDM space, and they're making significant inroads into high-growth sectors, too.
Like which ones?
Well, substantial orders in automotive, specifically electric vehicles.
EVs? Makes sense.
Two big orders in telecom as well. And a major win, this one's quite large, a 128 crore turnkey box build project in network security.
128 crore in one go.
Yes, slated for completion in 15 months. So a significant project.
That is significant. Any other sectors?
They're also deepening their presence in aerospace and defense. Remember that AS 900-100 certification goal?
Right.
That ties in. They've got a $1.8 million AI order related to that space, and they're actively targeting the growing drone industry.
Drones, too. What's the target there?
An ambitious goal of $10 million in business over the next 2 years.
Okay, so they're really spreading their wings sector-wise. What about geographically? Beyond India?
Yes, their global ambitions are definitely notable. They've taken specific steps.
Like the U.S. subsidiary.
Exactly. Their wholly owned U.S. subsidiary, Aimtron Electronics, LLC, in Texas, actually began operations on January 1st, 2025.
So very recent projections.
So they're projecting revenues of around $4 to $5 million for the next fiscal year from there.
Okay, a solid start. Europe.
Yes, they've also strategically established a remote sales office in Germany. That's their entry point into the European market.
So U.S. and Europe both getting attention. Clearly expanding their global footprint and diversifying market reach.
Definitely. It's a key part of their strategy.
Okay, let's shift gears a bit. Of course, a deep dive into financials often reveals, well, nuances. One area that caught our eye was some recent shifts in their reporting. What can you tell us about that? Particularly the reclassifications.
Yes, this is a critical point for properly understanding their numbers year on year. Management explicitly noted significant accounting changes.
Such as?
Moving elements like salary and wages into cost of goods sold or COGS.
Okay, moving salaries into COGS. How does that affect the picture?
Well, when salary and wages are moved into cost of goods sold, it makes the raw cost of producing a good here higher.
Right.
Which, in turn, reduces the reported gross margin, even if the underlying profitability of the sales hasn't fundamentally changed.
So it makes direct comparisons harder.
Exactly. It made direct year-on-year comparisons tricky, especially for gross margins. We saw a reported drop from 38% in FY24 down to 27% in FY25.
Quite a drop on paper.
On paper, yes.
Wow.
And it also affected how employee costs looked. But they've acknowledged this and, importantly, committed to releasing a press statement detailing these changes for clearer analysis.
Okay, good. Transparency is key there. Now, you might also be wondering about the dip in their operating profit margin, the OPM. It went from 25% in H1 FY25 down to 19% in H2. Any thoughts on that?
Yeah, the OPM fluctuation seems primarily due to their changing product mix.
Different sectors, different margins.
Precisely. Some sectors naturally have lower margins than others. As they ramp up in certain areas, like maybe some of the newer, larger volume contracts, it can temporarily impact the overall margin percentage.
That makes sense. And what about the receivables? There was a significant jump there, wasn't there?
Yes, quite sharp. Trade receivables jumped to 199 days, up from 66 days in FY24 as of March 31st, 2025.
Nearly 200 days. That sounds high.
It does look high initially, but management explained this was largely a strategic push in Q4. They wanted to ship a lot of orders before new tariffs were potentially implemented.
Trying to beat the clock on tariffs.
Seems like it.
Yeah.
And they've reassured investors that a significant portion of these funds, these receivables, have actually already been received since March 31st.
Okay, so hopefully alleviating concerns about immediate cash flow then.
That seems to be the message, yes.
Okay. Beyond the numbers, one of the most compelling aspects of Aimtron's strategy, I think, is how they're riding the wave of these global geopolitical shifts, especially the whole China Plus One movement. How is India positioned in this?
India is really becoming a sweet spot for manufacturing right now.
The sweet spot?
Yeah, as global companies are actively seeking alternatives to China for various reasons, and Aimtron is definitely leveraging this.
How specifically are they doing that?
By securing new design agreements, including some exclusive ones, for customers who are specifically looking for alternative production sources outside of China, they're positioning themselves as that alternative.
So what about the direct impact of tariffs on Aimtron itself? Are they feeling the pinch, or are they finding ways to maybe turn it into an advantage?
That's a good question. As a service-based EMS business, an electronic manufacturing services business,
Right.
the direct tariff impact on their current booked orders is actually minimal. Their value add is the service, the assembly, the design here in India.
So they're not importing finished goods from China that get tariffed.
Mostly not for their core service. Instead, Aimtron's strategy is to proactively work with their U.S. and North American customers to mitigate these tariffs for the overall product cost.
How do they do that?
For example, they are actively helping customers source components, like metal parts or cabinets, from India rather than China.
Ah, shifting the sourcing for the customer.
Exactly. They even mentioned a customer visiting recently to approve their India facility specifically for cabinet building work which was previously done in China. That's a direct supply chain shift they're facilitating.
That's a concrete example. It raises a question, though. What happens if there's a complete halt in supply from China for components they might still need?
Yeah, they address that possibility. Management's view is that while, yes, there might be temporary global disruptions if that happened,
Just in chaos.
solutions would ultimately be found. They kind of framed it as a man-made or political problem, suggesting it's something that can eventually be resolved politically or through market adaptations.
Okay, a pragmatic view.
And they firmly believe that even with, say, a 10% tariff on Chinese goods going into the U.S., India remains significantly cheaper than other alternatives like Mexico or reshoring to the U.S.
So India remains cost competitive regardless.
They see India as a winner in this prolonged U.S.-China trade situation because of that cost advantage. It's also worth noting, while about 70% of their raw materials are imported,
Okay.
less than half of those imports, so less than 35% overall, are actually coming from China.
Interesting. So they're not overly dependent on China for raw materials either?
It appears they've managed that dependency quite well.
Okay. So beyond their impressive FY25 results, what new orders are fueling their confidence for the future? You mentioned they seem to have a really robust pipeline.
They do indeed, and they've announced quite a few specific recent wins, which gives substance to that confidence.
Let's hear about them.
Okay, so most recently, July 1st, 2025, they secured a 34.8 crore order. This was for transformer-free UPS systems from a leading U.S. infrastructure firm.
Okay, U.S. infrastructure, good sector.
Yeah. Just before that, June 25th, they received orders worth about 49.6 crore across multiple growth segments.
Yeah.
And importantly, entered into a strategic manufacturing partnership with a company called Minder Group for solar grid tie inverters.
Solar inverters. They bolsters their made-in-India credentials, too, I imagine.
Absolutely. And then back on April 24th, they announced that really substantial Euro 128 crore network security order we talked about earlier, that turnkey box build project.
The big one, right.
And even earlier in 2025, they also picked up a 37.6 crore order from the electric vehicle sector.
The EV one.
And 2 turnkey projects totaling 52.9 crore in the AI and telecommunication sectors. So a steady stream of significant wins across their target areas.
It certainly sounds like it. Now, you mentioned the pipeline itself, the mention of an $80 to $90 million RFQ pipeline, a request for a quote pipeline, generated in just a short period. That's staggering. How realistic is it to convert such a large pipeline?
It is a substantial pipeline, yes. We're talking roughly 800 to 900 crore in potential business identified in just the last month and a half or so before the call.
Wow.
Now, in the EMS industry generally, a typical winning ratio for these types of RFQ opportunities, it ranges, maybe 20% to 40%.
Okay, so even 20% of that is huge for them.
Exactly. It gives you a sense of the scale of opportunity they're currently looking at. What sets them apart in winning these bids, they believe, is that end-to-end capability we discussed.
A one-stop shop.
Right. And also their strategic positioning as that viable China plus one alternative. They seem well placed to capture these market shifts.
Okay. So with such an ambitious pipeline and these recent wins, how prepared is Aimtron for this continued rapid growth? Do they need massive new investments to handle this kind of scale, new factories?
That's a really important question, and a key takeaway here, according to management, is their current capacity.
They feel they have enough.
Aimtron states their existing infrastructure, which includes ample real estate they already own, and importantly, a commendable zero debt status.
Zero debt, that's impressive.
It is. They believe this setup is ready to handle up to 500 crore in revenue without requiring major new capital expenditure.
500 crore capacity already, compared to the 158 crore they just did.
Yes, significant headroom. And they plan to add a second shift after Q1, which will significantly boost productivity from the existing lines.
Okay, utilizing assets better. What about that 25 crore Omni approval mentioned for the U.S. subsidiary. Is that for expansion?
Ah, good point. Management clarified that. The 25 core Omni approval, it's essentially an internal strategic allocation, not immediate cash outflow.
Okay.
It's earmarked as a flexible fund for potential future M&A activity, maybe acquiring a smaller player, or potentially setting up some light manufacturing in the U.S. if a very large customer specifically requires a U.S. presence.
So it's for future options, not immediate need.
Exactly. It indicates a proactive but quite measured approach to expansion funding.
Right. With such ambitious growth targets, what are the key pillars supporting their confidence? What gives them the conviction that, 50-70% compound annual growth rate, CAGR, is achievable in the coming years?
Well, they're confidently targeting over 280 crore in revenue for this current financial year. That's quite a jump already.
It is almost double again.
Their conviction for that strong 50-70% CAGR going forward really stems from that robust pipeline we just discussed.
The $80-90 million.
Yes. Plus, their strategic shift to the higher margin box build solutions and that growing international footprint in the US and Europe. It's a combination of factors.
Makes sense.
Yeah.
And how are they planning to keep us, the investors, the market, informed about all this progress, especially being SME right now?
That's another key point they address: transparency. While they are currently on a half-yearly reporting cycle, which is standard for SMEs on that platform,
Right.
they stated they are actively working towards providing quarterly financial results. This is to align with main board listing requirements, suggesting that's potentially on their roadmap.
Moving towards quarterly updates. That's good.
Yes. And in the interim, they've promised to issue press releases or business updates more frequently to keep investors informed between the half-yearly reports.
Okay, that's helpful. What about funding future growth? Any talk of raising equity?
They indicated no immediate plans for equity dilution. Given their zero debt status, they don't seem to need it right now.
Sensible.
But they did say they remain flexible. If a compelling inorganic growth opportunity came along, like a strategic M&A deal, they might consider options then.
It shows a pragmatic financial strategy, I think.
Okay, pragmatic indeed. So to wrap things up, you've now taken a really deep dive into Aimtron Electronics. We've gone from their impressive financial rebound and strategic pivots.
All the way through to their ambitious future plans.
Exactly.
So just to recap the key takeaways for everyone listening. You've learned how Aimtron is really leveraging India's strategic position in global manufacturing right now.
That's sweet spot.
That sweet spot. Navigating these complex tariff discussions and, crucially, securing substantial new orders across diverse, high-growth sectors like EVs, AI, network security.
Right.
Their commitment to shifting towards higher-value box build solutions alongside that international expansion, particularly in the U.S. and now Europe. It really paints a picture of a company focused on strategic growth. And working towards greater transparency, too, which is important.
Definitely. High-value products, strategic growth, and better communication.
This whole discussion raises an important question, I think. As these global supply chains continue to reconfigure, it feels like constantly.
It never stops changing.
Right. And companies like Aimtron step up to offer these comprehensive end-to-end solutions. How might the very definition of a global manufacturer continue to evolve?
That's a great thought.
And maybe what unexpected regional players, perhaps beyond the usual suspects, might emerge as key innovators in this next wave of electronic system design and manufacturing. Something to think about.